Hello, everyone, and welcome back to Options USA. Most investors believe in selling naked put is the ultimate way to generate income, but sometimes you can collect double premiums with less risk. And if you're like me and you're looking for structural efficiency, this channel is for you. Today, I'm going to show the concept, the Mannerheim Line. So, the Mannerheim Line, why this strategy beats negative puts for professional investors, okay? Step by step. But first of all, this is education, okay? I just choose NVIDIA aleatory, but I can do better with other stocks. Yeah? I'm familiar with other stocks, and I can trade better with other stocks. But if you like NVIDIA, this is good. This can be much better than just selling a naked put. Okay, the concept, the Mannerheim Line. Okay, during the World War II, Finland built the Mannerheim Line. What is the Mannerheim Line? It was a defense in depth designed to withstand massive pressure. Okay, so in options market, sometimes I do the same by using the leaps. Okay, instead of just selling a put, I engineer short straddle. Okay, I'm going to sell put, I'm going to sell a call, but the call will be protected by a very long term call. June, in this case, June 2027, it's 13 months ago. So, okay, we always have to do this. Which one is better? Naked put versus the money line. This is I'm focused on the structure, the income generation. Naked put limited only to the put premium. Money line double income. Call premium plus put premium until my long call expire. Okay, then if I have this long call, I can still selling my calls all the time until my long call expire. And it's easier for if it really goes wrong, it's easier to if you have a long call, it's easier to do some type of hedge or some time or at least some time to minimize your loss on the short put. This is a real example, okay? You can do better in the other stocks, or if the volatility is higher, sometimes it's better to, or when it has a difference in volatility short, with the short expiry date, with the long expiry date, you can do sometimes better, okay? But the stretch, sell one put of the strike $195, you are if you want to buy an NVIDIA, if you want to sell a put, you believe that NVIDIA goes up, okay, or at least don't really goes down. And it is for 140 days. I know it's a lot, but you're gonna sell one call to strike 195 for the same strike. So this is straight sell, put, sell, call, same strike. It's a straddle, but you're gonna buy straddle on call. You're gonna buy a call, strike $195. The result, you paid $5.80 upfront. Of course, it's not really good, you paid, but you can recover this very, very fast. Sometimes if just selling one cow a month, you can get this, and you have 30 months to sell or many weeks to sell, depends which one is better. This is the example, okay? The in the is an example in the platform, okay? The real example. Of course, you can get a little bit better these strikes. Maybe you're adapt to be like $5.70 or $5.60, probably $5.60, even with the other costs. But here is the cost. The break even, you lose money $173. And you can make, if you close the position, you can make much more. Okay, $3,300. Okay, but if you don't close the position, you can make more. And the probability of profit is not great, 68%. But if you know how to manage, you can close up 75, 78, or even 80% in this strategy that can make money. Maximum loss is a lot if NVIDIA goes to zero, or if NVIDIA goes to $80, $80, it's horrible, okay? But sometimes happens, and then you have to start with the stock. So you have to know how much you want to spend, okay? This is the maximum profit. You see, that's much better if NVIDIA goes like to 205, $224. You make much more than just sell a short put. Or even if it goes down a little bit, here you make like $3,000. It's much better than setting up. That's the case, but that's not the most important. That's not how much you make profit. You can make even more profit than that. And I'm going to show you how shortly. First, you have to think about if NVIDIA goes to 160, $150, really goes down to that price. If you're just short on puts, it's a problem. It's a problem. Of course, it's a problem. But you can sell a call. So let's say if it drops to 160, $170, the NVIDIA, the put row will become different. You make 1, 2 cents, but you always have the ability to continue selling a call. Not just a call, you can do other strategy with a call. If you believe that's going to be recovered, you can do a booster with a call to make much more interesting. If it goes to 170, you can do a booster, and if it goes to 190, you make more, or more. $180, you make double money. Like if the same is $200, you can do a booster. Booster is nice. Booster call. It's like a call ratio spread. I believe that in America you call that. You can do that. You have more protection. You can do this is in still roll your put and make a little bit profit. 5 cents, 20 cents, 25 cents. I know it's a lot, but if you have a call, you can manage it. As long, so in this example, I collect $40 in total premiums to pay for $45.80 for a long-term insurance just with a call, okay? Next time I can do with puts if I am afraid, né? But for a net cost now, at only $5.80 for these long-term insurance, just for the call. So I have a structured calls that allows me to collect weekly or monthly premiums with the tail risk almost completely locked down. If NVIDIA goes to $2,000, maybe I lose some money, the premium, the $5 premium, okay, for more than a year. But the tail risk is the real tail risk, okay? It's not just go for $300. The tail risk on the call, it's 500, 600, $700, and you won't lose a lot of money. You lose $5.80. Okay, it's okay. The risk is still really goes down. Goes to less than $100 would be really hard to revert this position. But if it goes to $150, I can manage. Okay. Okay, I'm going to show you if NV. Let's say 140 days is too long. 140 days too long. Let's do a shorter period. I'm going to show you one more example. I believe that's a worst example, but it's okay. NVIDIA, the same price was $190.06. So you sell one put, strike 195, sell one call, strike 195 for 56 days. Okay, you have to wait 56 days. And you buy a call strike 195 June 18. So February, March, April, May, June, just 4 months, not like 13 months. But okay, probably the price of NVIDIA won't change a lot on these 2 months. You have more chance that stays between 180 to $210, so you can have a great rolling. And you paid, of course, $5.25. That's the strategy. The probability of profit is a little bit lower, 65%. Of course, if some goes wrong, you can do some different things that can make you a little bit more profit because you always can. If it really goes down, you always can sell. And that's the point. If it really goes up, in this case, you may lose some money. If it really goes up above $274, you start losing some money because you paid this $5 and the maximum you lose if it goes up it will be $5.25. That's it because you have a call. It's covered call. Okay, not with stocks but with a long option. And the maximum return is say 1600s, but you can make more. Okay, in this structure, if you stop selling the put here, goes like 198, you can make more than 1600, especially if you do some other types of structures. So you would show you here. Price is $200, $22. You make 1300. It's much better than just selling a put. It's not great, okay? I prefer the May strategy. I know that it's gonna have to wait more, but depends of the stocks. Sometimes it's really good doing short periods, maybe even 30 days to like 8 months. Sometimes you can buy this. Depends the type of volatility, depends the difference of volatility. Can show you other examples in the future videos. But this is the concept. The thing here is you can get double premiums if you stock that's not bad. Nvidia, um, I know your money is you have to conserve your money, so you have to understand that if it really goes down, you have to buy it. There's no other option. It goes to $100, $20. There's nothing I can help you. Okay, especially if it's under $100. There's nothing I can do. And you have to you stock it. It's okay. I know NVIDIA is great, but sometimes it goes down 50, 60, 70%. Great stocks. The secret here. I know you have to recover at least $5 more or less. But if it really goes down, selling a cow 15% out of the money, OTM, monthly, pays over $1 on NVIDIA with this volatility. $1. And then more the premiums of put. Sometimes 60 cents, 50 cents. So you get $1 and more 50 or 60 cents. This is going to help you until it goes up and then sometimes even closer. For example, to 5% OTM. The premium can exceed $5. Imagine if you sell put, you roll the put, okay, and you sell this call, maybe you make $9 on this volatility environment. This is not a high volatility, okay? But if the volatility goes even upper, like 40, 45%, maybe you can make $7 and more, $6, you can make $11 just 1 month. And if it was just the put, you make less than half or half. It's double your chance. Okay, but that's a problem here. I don't know how NVIDIA goes up, it goes down. I really don't know. Okay, that's the matter. I don't know, especially the long term, 140 days. But it's probability and chance. And if it goes wrong, some types of hedge, at least you can sell one call and collect premiums. Because the worst thing is when it goes down and the premiums get just a little bit. Okay, at least it's double premium. But if it goes up, you won't lose money. You make a little bit. Okay, fine, thanks. But if sometimes I'm going to show you NVIDIA stays in a range. And even in this range, the volatility is not lower. It's going to be like 35, 32, 38, 40%, which is great. Here's the example. Here, this is NVIDIA from July to the end of December. See, this is great. This is, you would make a lot of. Imagine if you change, come back, and then you stay like 4 or 5 months. Of course, you don't know. Sometimes happens, and then it's a good month. You make a lot of profits, maybe $9, $10 every single month, and then in 5 months, 6 months, you can make 40, $50. It's like one third of stock, and that's change the game. Okay, 50, 60, and you have still more 7 months. Even if you make 7 months, you make more $15. That'll be great. More $15. If you stay with the put, okay? But if you don't want to take the risk anymore, you can do it again. Okay, just selling the calls for 13 months, and you do this strategy once more again. So you have collected premiums 13 months calls and more, one more stretch that you're making. Maybe one day you get like 4 stretch of that collecting premiums with the same exact risk just of selling one short put. So remember, even if NVIDIA drops to $150, the put row will become difficult, but you always have the ability to continue selling additional calls. And as long as the stock stays with this price range that I show you, 160 to 220, it's an absolute gold mine for collecting premiums. This strategy yields massive returns in the sideways market. In the sideways market, it's great. It also performs well in a uptrend, it goes really up, through with more moderate gains. Of course, you make gains, but sometimes you make just $20 in the 13 months that goes up. It's not a lot, but sometimes happens. And for a more advanced investor, these long-term calls serve as the foundation to build complex structures that can hedge against a market drop of up to 30 to 40%. More than that, it's going to be hard. But if the market drops 30 or 40%, I still can do something that makes you bleed less on any video, makes you bleed less. I show you sometimes the hedge that I'm doing. So watch the other videos, and meantime, I'm going to try to show you and create more videos that helps you make great profits, at least like 10, 15, 20% a year constantly, okay? And I'm going to show you some structures that he that really can make like You risk $5,000, not buying, okay, with premiums, but you can make $30,000 in this, having this structure, okay, having this structure, the same risk constantly. You can make this. Of course, you have to be at least lucky. Yeah? It's hard to lose money in the long run on this structure. So, if you like this video, click the like button and subscribe to the channel. Thank you. Have good investments.